Let's talk to Nona Peltier now with business news. Nona, Reserve Bank has removed the LVR restrictions. Do tell us some more.
Yeah, so that was an announcement that was made just before 5 this afternoon. The Reserve Bank had flagged this last week, said they were going to have a short, period of consultation and then make a decision. So they consulted with about some 70 members of the public, industry, and so on, got a wide range of views, also directly approached Maori and Pacifica groups as well to see their views, and then balanced it all up and decided that it was in the interest of New Zealand's financial stability to make this move. And this really means that from tomorrow, there are no loan-to-value ratio restrictions on bank lending to investors and homeowners.
So, meaning that if you decide to get yourself a mortgage, there's no set limit as such for your deposit?
Yeah, so we'll probably remember that retail banks used to have to restrict their lending to no more than 20% of their whole book to buyers with less than a 20% deposit. And for investors, they were restricted to only 5% of their loans to property investors with less than a 30% deposit. So this was a way of reining in the super hot housing market we had. Now, we had these restrictions in some form or another since like 2013. It's a very long time. And, some people started to think that they would never be lifted, but all at once, they're gone from tomorrow morning. I guess from midnight, basically, May 1st, and for a whole year before they're reviewed again. So, yeah, interesting times, but really the move was made to make sure that the measures that have been taken to, help out the housing market didn't lead to a sort of a collapse, because so much of our investment is in our homes, of course.
Nona, the other thing is the ANZ Bank has released its first half financial result, and, what did it make?
Okay, so this is the country's biggest bank by far, and their profit for the 6 months ended March was $789 million. That's still a very strong profit. That's for the period ended in March. Now, that compares with $1.1 billion a year ago. Now, they said that basically the reason why it's been, dropped so much is basically their costs have increased, and they've put aside more money to accommodate what they expect will be some bad debts, basically, the negative impact of the looming economic downturn, which is yet to really be seen, although we already have been feeling it. Certainly we've been, businesses and retailers and so forth have certainly felt that, and homeowners that have lost their jobs and so forth. Now, they've put aside $200 million to cover those expected losses and bad debts. But the chief executive of the bank said that they've helped so far 30,000 customers with, at a cost of $12 billion. That's like not necessarily cost, but in terms of financial assistance and restructuring of loans and so forth. Gotcha.
Let's take a quick spin around the markets.
Right. Well, the NZX Top 50 Index, it fell 1.25% today. That's 134 points down to 10,532. But we were all over the place. It was quite choppy. It wasn't exactly, all the way down from the start. But, yeah, it's been an interesting day because overall the markets are pretty much more upbeat with some signs that there may be an effective treatment for COVID and just the opening up of the economies in places. Now, the New Zealand dollar is an interesting story. We rose quite substantially over the 24-hour period, 2.5%. We're at 21.4 U.S. cents at the moment. 61.4 U.S. cents, excuse me. I don't know, where did that come from? 94.1 Australian and 49.3 British pence.
Thanks, Nona. Nona Peltier with our business wrap there.